This is the Asia Trade. I'm Avril Hong in Singapore.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set to open lower as the Fed holds rates and still sees 2 cuts this year. But Jay Powell is warning he expects inflation to pick up in the coming months.
We have to be forward-looking, and the thing that every forecaster, every outside forecaster, and the Fed is saying is that we expect a meaningful amount of inflation to arrive in coming months.
President Trump meets again with top advisors, reportedly approving an Iran attack plan, but the White House is remaining tight-lipped.
And I'm Stephen Engel at the Mobile World Congress in Shanghai, where we'll be speaking about the future of connectivity in the era of AI with the Gsma Director General Vivek Badrinath.
And we're expecting, as you said, Heidi, these Asia stocks to open lower against the backdrop of a Federal Reserve that left rates unchanged. This was more or less as expected. But what it also flagged were these inflation risks, given the unknowns about the tariff impact. Also lowering its growth projections despite keeping to those 2 dots, those 2 rate cuts still expected for this year. And I think all this points to the uncertainty about the rate trajectory for the U.S. Central Bank. We are seeing the Hong Kong Monetary Authority also, as expected, as it tends to do, in lockstep with the Fed, leaving its base rate unchanged at 4.75%. Meantime, seeing also a bit of firmness in the Japanese yen, but still at the 145 handle against the greenback. Nikkei futures pointing to a slight upside after already 3 sessions of gains in Japanese stocks. Heidi.
Slight upside, but also quite a bit of fragility that we're going into this session here in Asia with, aren't we, Avril? And take a look at the picture when it comes to US futures. A little bit of downside there, that sort of pullback that we see across NASDAQ and S&P futures. Treasury markets, it was quite an interesting kind of session. US bonds, that sort of fragile rally, recovery rally, if you will characterize it as such, really stalling as we saw that endorsement still of a patient approach from Jay Powell. Of course, we've been watching energy markets very closely there as well, and WTI as well as Brent just edging up in what is continuing to be very, very turbulent markets there. There is still these ongoing fears of war escalation. We're hoping perhaps to get more details when it comes to what to expect from the US side. But at the moment, we are seeing New York crude just giving back some of the recent gains, but still $75, just above $75 a barrel there. Still the highest closing price since about January, Avril.
Yeah, Heidi, those Fed officials, though, continue to pencil in 2 rate cuts in 2025, saying uncertainty over the economic outlook has peaked but remains elevated.
Uncertainty about the economic outlook has diminished but remains elevated. Many, many surveys say that. They do. So, and that's actually a line from the Teal book, which you can see in 5 years. Remember to check that.
Maybe the world will be over by then.
No, but if you think about it, tariff uncertainty really peaked in April, and since then has come down. And that's really what that's just acknowledging. It's diminished, but still elevated. It's uncertainty. So I think that's an accurate statement.
Well, let's bring Betsey Stevenson, she's a professor of public policy and economics at the University of Michigan and previously on the President's Council of Economic Advisors. She was also the chief economist at the U.S. Labor Department. Betsey, always great to have you with us. And it's such a tricky time for central bankers, right? Is there a sense that the likes of Chair Powell are sort of just sitting on their hands for a bit as myriad risks perhaps become a little bit more certain as we get into the next few months? We're not even sort of talking about trade at this week, right? We're looking at these geopolitical risks, but is it any surprise that there's not a willingness to take big bets on either side?
Well, I think you can see what they're thinking exactly by looking at their projections. So, you know, it is true that their forecasts for the U.S. economy are getting worse over time. You know, in December, they thought that the U.S. economy would grow 2.1% this year. They revised that down to 1.7% in March, and they revised that down again here in June to 1.4. So it's like every, day it gets a little bit, there's a little bit more of a sense that, okay, we're not going to have a strong year this year. And I thought it was kind of ironic to listen to him say, like, there's less uncertainty, but that doesn't mean things are good. We actually feel more certainty that we're going to have tariffs that stick that are higher than any kind of tariffs the United States has had in 50 or 60 years. So we're probably going to end up with some kind of effective tariff that is probably, 5 to 10 times higher than what we had before Trump came into office. So I think our uncertainty is coming down, but it's because we're resigned to the fact that we're going to have higher tariffs and we're going to have lower growth. So if you look at that range of forecasts, you did see their uncertainty come down, but it was actually because the people who were most optimistic have now sort of joined the rest of the pack and thinking that it's going to be slower growth. So you might say, then why shouldn't they be cutting rates right now? Well, that's because that certainty about we're going to end up with higher tariffs and they're going to stick means that we do have inflation in front of us. And he's got to make sure that we don't let that inflation take off. And here's another thing to consider, which is as inflation expectations have risen, effectively they are cutting the real rate, because keeping rates the same when people are expecting higher inflation is a rise in nominal rates and a cut in that real rate. So the market's cutting rates for them.
Yeah, that's a really key point, Betsey. I have to sort of, not chuckle, obviously. There's a lot of negativity out there, but, you make the point of is certainty when it comes to a more negative outlook really a good thing? But we've obviously seen the worries for the markets over energy markets and energy costs. Is it too early at this point to be able to look at the inflationary upside pressure from a potential change in those energy market dynamics?
Well, I thought on this, Powell was quite reassuring and reminded us that, if you go back to the 1970s, a big oil price shock was terrible for the United States. But, the United States doesn't rely on foreign oil as much. In fact, the U.S. had achieved energy independence. Now, of course, the market means that, prices should go up because we can sell anywhere in the world. We're not forced to sell to ourselves. So, and the whole, you obviously care about more than the United States. The whole world is going to suffer, if with this geopolitical tension. So I think there are real global worries about that. But I think what Powell said is those are not huge inflationary worries for the Fed right now.
What about domestically, Betsey, when it comes to what you're seeing among the American public, worries about consumer confidence, job security?
Well, we do see that consumer confidence is down, CEO confidence is down. People do have concerns about job security, and they're not just about tariffs, right? We have Amazon coming out today and saying, we're going to need fewer people because we're going to outsource our jobs to AI. And so it's no longer going to be about, competing with workers in foreign countries. It's going to be competing with artificial intelligence. So I think there is a lot of anxiety. And in fact, I would say this anxiety has been brewing for quite a long time and is one of the explanations for the tariffs that we have today, is that Americans have real anxiety about where the economy is going. I don't think the choices President Trump is making has reassured them. In fact, I think that it's made it worse. But I do think it would be a mistake to think that that's the only thing weighing on American consumers and on American businesses.
What else is weighing on consumer confidence and businesses then? And, to what extent are you seeing, perhaps for American industries as well, the cost pass through, given how the dollar has also been depreciating?
Right. So, this big set of questions. So, and I think consumers and businesses are in different places. So from consumers, I think that they think there's just a lot of uncertainty around what is going to happen in the workplace, right? Are they going to have jobs? What we're seeing is a very weird labor market right now where unemployment is low, but it's not a good time to be unemployed. It's not a good time to try to change jobs. And that creates a little bit of anxiety in consumers. If you start to fear that you could lose your job or that you could see your wages stagnate, you might start to pull back on your spending. And as you pull back on your spending, that makes that a self-fulfilling prophecy. On the business side, they're trying to make decisions in a world that is highly uncertain, And that's about tariffs. It's about the geopolitical risk. And it's also about political risk, right? We have a government right now that is very, very interventionist. I think a lot of American companies thought that the great thing about President Trump was he was going to let them just do their thing and that they were going to not have to deal with a really heavy regulatory environment. But what they've learned is that it is still a pretty heavy environment. It's just on a different set of issues and preferences coming out of government. So I think that uncertainty means everybody's moving a little bit slower. And when you slow the pace of movement, you slow economic growth.
Betsey, I think when you spoke with Bloomberg back in April, there was still this sort of discussion over whether it was a bigger growth risk or a bigger inflation risk and whether we could kind of see through the inflation risk. Do you think now that there's a real risk of stagflation for the U.S. economy?
I mean, certainly every forecast has moved in the stagflationary direction. And I think if you think about what can cause stagflation, like we had stagflation in the 70s, stagflation really needs to come from some kind of supply shock that causes economic growth to shrink in a way that's sort of mismatched with where consumers are at. So consumers want to keep buying stuff, so prices are going up, but we're producing less. And that mismatch in the 70s, that was caused by all the oil price shocks. What's happening right now in the globe, and it's the same thing that caused the inflation in 2021, 2022 coming out of the pandemic, is supply chain problems. So we're not able to move goods around the world. We're not able to count on trade. And that's shrinking what we can possibly produce, but that's not shrinking our desires. And so that is where we get that stagflationary pressure. And I think we're just going to have to wait and see sort of how that ends up playing out. What's going to happen geopolitically in all the domains, tariffs, war, et cetera.
That disconnect there. Great to get your insights, Betsey. Thank you so much. Betsey Stevenson, Professor of Public Policy and Economics at the University of Michigan. Coming up on the Asia Trade, we're at the Mobile World Congress in Shanghai, speaking to GSMA about how AI is reshaping connectivity. We'll talk market strategy with Man Group, and Guotai Junan International gives us their view on China's push for a new global currency order. Much more ahead. This is Bloomberg.
Iran's got a lot of trouble, and they want to negotiate. And I said, why didn't you negotiate with me before? All this death and destruction. Why didn't you negotiate? I said to the people, why didn't you negotiate with me 2 weeks ago? You could have done fine. You would have had a country. You don't seriously think I'm going to answer that question? Will you strike the Iranian nuclear component? And what time exactly, sir? Sir, would you strike it? Would you please inform us so we can be there and watch? I mean, you don't know that I'm going to even do it. You don't know. I may do it. I may not do it. I mean, nobody knows what I'm going to do.
President Trump, they're choosing not to say whether the US will join Israel's military campaign against Iran. Let's get more on the latest developments in the Middle East. Let's bring our Bloomberg editor, Michael Heath. And that's sort of the next thing that it hinges on. We're just waiting for more clarity as to what that US positioning is going to be.
Yeah, I mean, he's held more talks with his national security people, and there was an interesting report from Axios that moved just recently that cited him as asking his team, if they do actually go ahead with this and use this bunker buster bomb, will it actually destroy Fordo, which is the facility everyone's talking about that's sort of under the mountain and very deep, which is a reasonable question. I mean, we
don't know.
No, we don't. It's never been used in wartime. They've obviously tested it and that sort of thing, but it's never been used in wartime circumstances. So, yeah, that is a question. And the worst case option, I guess, for the US is that it does join, and then it doesn't achieve what it wants to, but then it opens itself up to this huge retaliation, which everybody anticipates Iran would, respond with, kind of thing. So yeah, it's really still everybody on tenterhooks. I mean, there was also a Reuters report saying the US is moving some of its assets out of the area in the sense of potential targets in the event of Iranian retaliation, but it's just basically speculation at the moment. I mean, as you heard the president say there, he says he doesn't know. The inclination of everybody is that Trump has said for a long, long time that Iran can't have a bomb. I mean, he is right in saying that that's been his consistent position. So, one would assume that at some point they will go in, but it's really unclear. And Iran could come to the party and say, look, it's not worth it. But we just really have to wait and see.
Mike, what would the calculus be for the U.S. on the domestic front be, though, to the American public? Presumably it would be a huge political headache if they do intervene.
Yeah, well, that's exactly right. And the question is, the polls show that most people, the majority oppose it. But by the same token, in a situation of uncertainty, in a wartime situation, everybody is cautious. I mean, that goes without saying. And, the argument, I guess, against it is that Trump and the whole MAGA movement is based on an isolationist premise that the US needs to be focusing on its own issues, on its own country, on making America great again, so to speak. But this is also an issue, as I mentioned, that Trump has been very, very consistent on. A rare one that he's always held the same line on, that they can't allow Iran to get to a nuclear weapon. He also mentioned, and this hasn't come out in intelligence agencies, but this is his words, that Iran was within weeks of having a bomb. So we really are at a pivotal moment, based on those lines. So the MAGA movement, and Trump said it himself in 2016, I think it was, that if he shot someone in New York, they'd still support him. So I think that he doesn't really need to worry that his base is going to move away if he breaks his word on becoming involved in the Middle East. But the bigger question there is, does the US then get dragged into a prolonged conflict? I mean, the ideal is that you drop these bombs and, it's a surgical strike, you're in and out, and that's it. But foreign intervention never works that way. It's never so simple. It always has repercussions that are unexpected. And, the recent US experience in the Middle East underlines that. Iraq is the basic point there, that, everyone thought it had been an amazing campaign and it turned into a catastrophe.
Yeah, a number of lessons and examples in the history books as to why these could turn out to be a protracted crisis. Mike, thank you so much for sharing your analysis with us. Michael Heath, a Bloomberg editor. Now to some of the other big stories we're following. Thai Prime Minister Paetongtarn Shinawatra has suffered a major political setback after the second largest party in government quit the ruling coalition. The loss of the Boomjai Thai Party's 69 House seats weakens the fragile coalition and heightens risks to its survival. The Thai leader is facing calls to resign after blaming her own military for escalating a border dispute with neighboring Cambodia. Family members of people killed in two Boeing 737 MAX crashes are urging a U.S. federal judge to reject a proposed deal allowing Boeing to avoid criminal charges. The deal requires the plane maker to pay more than $1 billion in fees and fines, but avoid criminal prosecution. Lawyers for 15 families argue that Boeing should instead stand trial for criminal conspiracy, as the government had originally planned. More ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade, focusing as well on China, where consumption subsidies are threatening to overwhelm authorities in even the richest regions as consumers go on a shopping spree that boosted retail sales growth to the strongest in more than a year. Let's bring in our China correspondent, Min Lo in Hong Kong. Min, we're seeing this stimulus program, I think, very popular, and we see how it boosted retail sales in the month of May. But does it also become a question of provinces running out of funds?
Yes, indeed. And actually in May, if you look at some of the specific sectors that are covered by the subsidies, like home appliances, those are seeing double-digit growth rates of over 50%. And yes, some provinces are actually running out of funds. They're pausing the subsidies, or they are managing daily quotas right now. And this is doing two things, right? Number one, it is encouraging people to buy goods that they would have bought later. So there is going to be a payback in the future. And number two, bear in mind the government has already doubled the subsidies this year from 150 to 300 billion yuan, and it's being funded by these ultra-long special sovereign bonds. It's posing a fiscal burden on the government, especially given that land and tax revenue has been declining. The deficit this year has been raised to the highest in decades. The special sovereign bonds quota has been raised to 80% more than last year as well. So all of these are going to raise the interest payment burden on the Chinese government, and it's going to erode their spending power. So the government will have to think about what is a more sustainable way to boost consumption in the longer term.
Well, that's a question, right? Because a lot of these issues are both structural as well as demographic. What are the options still available to Beijing?
Thank you for all of this.
Yeah, so one thing the Chinese government is trying to do is to boost business confidence, to get them to invest more, to hire more people, which theoretically would eventually translate into higher spending power by the people. But of course, this is something that will take longer term to materialize. Some of the steps taken by the government so far is to meet government arrears to companies and calling on major EV makers to start paying their bill payments to other vendors, for example. But bear in mind as well, the current subsidy program, as you said, it's been very popular. It's been facing some teething problems, especially when it comes to the trade-in subsidies for cars, for example. The government is now scrutinizing the appearance of these zero-mileage cars in the second-hand used car market. And that's because Chinese dealers have been exploiting the subsidies by buying these cars in bulk, registering them to qualify for the rebates, and then reselling them in the used car market. So again, there are all these teething problems. It's appearing in the home appliance sectors as well, with some vendors actually looking to raise prices to take advantage of those subsidies for consumers. So these are things that the government have to fix in the current subsidy program. And of course, longer term, there are a lot of analysts calling for the government to raise the income of the people, to improve the income distribution system. That's something we have seen being mentioned in state media as well. So perhaps something that the government might consider for the longer term as well.
Bloomberg's China correspondent Min Lo there in Hong Kong. Take a look at how Asian markets are setting up as we continue to kind of pass through, staying the course really was a message from the Fed, right, acknowledging some of these uncertainties, but also warning that the tariff-driven uncertainties, the inflation risk continuing to complicate the bid to ease policy to supportive cuts is still kind of what is being seen after this. Asian equities as well as FX looking like this at the moment. $-yen holding at that 145 level. We're also, of course, watching for the further developments when it comes to the Israel-Iran conflict. We know that President Trump met with top advisors again to consider whether the US would join the war in some capacity. The White House so far, though, offering very few clues there. No final decision supposedly not being made yet. S&P futures looking a little bit softer there. We're also seeing downside across most US futures. So not a whole lot of support for the Asian equity session from either the Fed or the overnight session on Wall Street. More ahead. This is Bloomberg.
Despite elevated uncertainty, the economy is in a solid position. We expect a meaningful amount of inflation to arrive in coming months. What's tended to happen is when there's turmoil in the Middle East, you may see a spike in energy prices, but tends to come down. The amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are. The current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments.
Fed Chair Jerome Powell on the central bank's decision to leave rates unchanged. Let's take a look at how markets are shaping up as well. Based on futures, we are pointing to a day of declines. That caution from the Federal Reserve flagging those inflation risks and the uncertainties as well, given how we are not quite sure how the U.S. is going to respond to the Israel-Iran conflict. Just an added layer of uncertainty for markets. Take a look at how commodities are faring as well, with Powell talking about the oil price spikes. We've seen Brent U.S. crude go from 65 thereabouts last week to 75 this week, still sitting below the $80 handle. Goldman sees about $10 a barrel on the geopolitical risk premium for Brent crude. Gold also catching a slight haven bid. Haidi.
Let's bring Garfield Reynolds, who leads the Markets Live Asia coverage. And so it's interesting. We're speaking to that previous guest and saying, yes, there's sort of more certainty as the Fed sort of flagged about the U.S. economy. A lot of that certainty might be to the downside, though.
Yes, that is part of the concern and part of the reason why we saw stocks in the U.S. fall into the close. So they ended the day little changed, essentially. A big part of that is the concern that A, the economy is showing some signs of strain, and B, the Fed is pretty certain that it is not going to do anything unless those signs of strain turn into a major downturn, by which case the concern is that it would be too late. So they'll do too little too late because they have kind of lost policy flexibility to some extent. That's because we heard Chairman Powell talking just before I came on about how the strong expectation is that tariffs will lead to inflation pressures, and the Fed is far from certain that the inflation battle has been won. You also have what's going on in the Middle East as a short-term inflation driver. So that's meaning that the Fed is not interested in cutting rates in the short term unless and until you get a severe economic slowdown. And again, policy famously acts with a lag. So if these signs of strain come to pass, in the next few months, and then the Fed finds itself cutting in September, for example, the sort of area where some traders are starting to position for that to happen, the assessment is that will be too late, that the economy will already be in a severe enough downturn that the Fed's rate cuts will act to help, but they won't act to stop that downturn.
Garth, if they cut in September, is it going to be a jumbo one? And how problematic then would that be? Because last year we also saw, ahead of September's big move, there were similar warnings. The economy eventually looked like it held up okay.
Yeah, well, if they cut in September, who knows if it's a jumbo one or not? A lot would depend on how the data has evolved. If you've still got the unemployment rate at around 4%, where it's been for quite some time, then any rate cut that comes would likely be just 25 basis points. You would need something like 4.5% for them to go a jumbo cut. And if you do get a jobless rate climbing at that pace, I think then you would look for a series of cuts because that pace of job losses would be enough to have the Fed worried that the U.S. economy is seriously rolling over. And again, with that lag and so on, so they would be rushing to catch up. I think the bigger concern would be that by that stage, if they're cutting by 50 basis points, it's going to add to the fear rather than revive the hope. So stocks might well be wobbling by that stage and actually fall faster once the Fed starts to cut by large amounts, because they would be infected by this sense of panic that this is the recession that we've to some extent all been waiting for about 2 years.
Garth, thanks so much for sharing your analysis with us. Good stuff. Bloomberg's Garfield Reynolds. Now, we've also been tracking this 18-month-long takeover saga by Nippon Steel. It's now closed. Its $14 billion acquisition of U.S. Steel. Its ADRs rose in the U.S. overnight, and we'll be watching that stock in the next hour. For more on the deal, let's bring in our Tokyo Bureau Chief, Isabel Reynolds. Isabel, why has this takeover been so controversial? And I mean, we're also hearing about these financial costs likely to add up for Nippon Steel, I think to the effect of 230 billion yen following the deal.
Yes, I mean, this has been an unprecedented story in terms of a takeover deal. I mean, the first thing, of course, to make clear that it was always, commercially speaking, it was always a really good deal for U.S. Steel in terms of price, in terms of the pledges that Nippon Steel was making about how it was going to maintain investment and maintain jobs in the U.S. But it did become a political hot potato in the U.S., as we know. The whole saga started just as we were swinging into an election cycle in the U.S. None of the candidates could afford to be seen as less patriotic than any of the others. So there was a lot of opposition in those terms. We saw the leadership of the main union involved in the deal was against it. And then, of course, we saw President Joe Biden opposing the deal in terms of national security. And that set off a whole sort of diplomatic issue with Japan, because Japan sees itself as one of the U.S.'s most close allies in the world. And this was sort of seen as undermining the image of that relationship. So this whole thing has been totally unprecedented. It's come to an end now. But as you mentioned, there is one thing we don't really know still, and that is, will this work out commercially speaking? I mean, there's a broad sense that it is not a good deal for Nippon Steel. We've seen shareholders last week come out and criticize it very strongly and call for the leadership of the company to step down over it. We do have some information about one of the issues, which is the golden share. Some of that was explained last night, how far the U.S. president will have power over this company, and it is quite broad-ranging. That's very unusual for a U.S. president to have that much power over a company. And the other issue that we don't know very much about at all at this moment is basically, where is Nippon Steel going to get all this money that it will need to invest in the company? We have Nippon Steel speaking at 10 a.m. today in Tokyo, so we're hoping to hear some more information about that at that stage.
You've alluded to some of the uncertainties. Now that we've sort of had it formalised, what could go wrong, right?
Well, exactly. I mean, the problem is, if it turns out there's a lot of equity financing involved in this, obviously that will be very dilutive for the existing shareholders. They will not be pleased at all. And of course, if the company doesn't have freedom to do what it needs to, commercially speaking, I mean, we just had Garfield talking just now about a potential recession coming up. If you're pouring money into a company that was not doing so well, how far are you going to make a commercial success of this deal? This is really a big mystery to me.
Bloomberg's Tokyo Bureau Chief Isabel Reynolds there. We are just getting some breaking news at the moment from the Chinese ambassador to the US. Xie Feng speaking in Washington at the moment. He is speaking at the US-China Business Council gala alongside the US ambassador to China, David Perdue, there as well in DC this evening. Some pretty strong lines coming through from Ambassador Xie. They say exclusionary policies will only motivate China to work harder, that protectionism is no better than, quote, drinking poison when thirsty, and saying that the benefits of US-China trade are generally balanced. And this, of course, as we continue to watch for further developments when it comes to this fragile détente that we see between the White House and Beijing when it comes to some of the principles agreed to talks in Geneva, and then over 2 days of talks in London when that relationship was looking ever more frayed, and perhaps the sort of trade truce was on the brink of falling apart. At the moment, of course, we've seen a little bit of a pause when it comes to some of these trade developments as the world and as the White House continues to focus on the escalating geopolitical situation in the Middle East. We've seen some success when it comes to the trade deal with the UK, not so much when it comes to Japan, and no further certainty as to where it's headed with China in this trade war, Avril.
Yeah, Heidi, it's interesting, right, how the ambassador is talking about how this would spur China to work harder. We've seen how the Chinese side has made advancements even in the face of US restrictions, particularly when it comes to tech. Up next, we head to the Mobile World Congress Shanghai, where GSMA joins us to discuss how AI is shaping the future of connectivity. This is Bloomberg.
Let's get you to Shanghai now, where the Mobile World Congress is going into its second day. This is, of course, Asia's largest conference for mobile connectivity. Business leaders discussing the latest technology, including artificial intelligence applications. Our Chief North Asia correspondent, Stephen Engel, is there and standing by with our next guest. Steve.
Yeah, hi, Heidi. It's great to be back at the Mobile World Congress 2025 here in Shanghai. Of course, there's been so many different developments in the technology world since the pandemic, obviously, with the introduction and the integration of AI into a number of different mobile platforms. And of course, the whole enterprise side of the mobile economy is critical in this part of the world in China. Let's bring in our guest and the host of the MWC 2025 Shanghai. That's Vivek Badrinath. He is the Director General of the GSMA. Thank you so much for having us here.
It's my pleasure.
So tell me, where are we right now? I mean, so much has been made about the evolution into 5G, and that was had a high cost barrier, obviously, for operators in Europe, US, and here in China. But where are we in the evolution of really making it a value proposition to basically justify those costs?
I think what we're discovering here, and the energy since yesterday in this event shows this, with all three major operators in China so leaning in so much into 5G, is that the promise of 5G is real and that we're on the path to roll out. So if you look at China, you've got more than a billion 5G connections already in place. The operators are all rolling out 5G standalone. They're rolling out 5G advanced. They're building more and more applications, and that's what the action is all about here in these days. But, and that proves that the promise of 5G, which was quite different to the promise of 4G. 4G was about bringing mobile broadband to everyone, to get smartphones in your hands that can do internet. 5G was an enterprise G, if you would like to call it that. And that meant that you have to roll out projects for it to be worth it. So you equip ports, you equip factories, you equip hospitals, and that delivers value.
How do you respond then to the criticism that there were overpromises for 5G as it relates to the cost of rollout and the licensing and, of course, the build out of the infrastructure, where China has the scale to do it and the direction from the state-owned three telcos, whereas I know you've been critical of what's happening in Europe because the cost barrier has been quite high. You want to see consolidation in order to get scale there. China has scale.
I think scale matters in order to roll out these features. When you want to roll out standalone, when you want to deliver it so that factories in remote areas or ports or hospitals can benefit from the technology, that requires you to make that upfront investment. And scale helps to make upfront investments because you amortize over a broader base. And that's what we're seeing here. And I think, at least what the learning from this is that those applications exist, that they create value, that they bring benefits to users, that they bring benefits to corporates who invest. So I think the promise of 5G was not overstated, but the need to put in place the infrastructure, the enabling infrastructure to deliver on that promise is what we're on the path of.
China's been able to do that. I want to quickly talk about Europe because much of your career was based there. Your call for consolidation to help build that scale, have larger telcos, but there's also been others in Europe who are saying that creates giant monopolies where the end result and the services are not up to scratch. How would you respond to that criticism?
Look at the technological advance and the leaning into innovation that you see in this region, that you see in China, that you see in India when you have operators with more than several hundred million customers. They're able to invest. And if you look at the price structures, they have been able to bring these solutions to market in an effective way.
How many operators should Europe have, ideally?
What I can say is that the average operator in Europe has 5 to 6 million customers, and here you're at you're at 450.
What is the great opportunity and the challenge for the integration of AI? AI, large language models, the life cycle improvements are happening at such a rapid pace, where telcos are more of a legacy, utility type business. Can they keep up with the pace of innovation in AI, and how do they do that?
I think we can be very proud of what the telco industry has done on AI. The telco industry looks at this, it's a big industry with several high levels of investment. And on digital, they discovered it over time and improved their digital performance. On AI, they've been there from the beginning. If you look at AI, it's been improving technical performance, customer service performance in telcos. We have 80% of the telcos in our base who are actually already rolling out AI at scale. So I'd say AI has been adopted by telcos. So AI for telco is already a reality. We've adopted a framework on responsible AI because we're big companies with lots of customers. On the other hand, telco brings a lot to AI, and I think telco for AI is a big subject. The impact on networks, because to access a large language model, you need a device, you need a network, you need access to reach those data centers.
What are we seeing in China where there are inherent advantages to the state-owned telcos, whether it's China Telecom, China Unicom, or China Mobile, where they have the policy backing and they have the resources to build out their data centers and the infrastructure necessary to then sell those AI services, aka the data centers, to enterprises across China?
I think what's most important is the consistency of the ecosystems. People talk to each other, they collaborate. So when you look at roundtables here, it's always a telco with an enterprise providing solutions. It's true that in many geographies, telcos are able to be AI providers because they were the first to have big data centers, or because they had big data centers and infrastructure and they're close to the infrastructure. It's not the case everywhere, but what is the most important is that you work with someone on an application, because it's not about having a standalone LLM in a box and a network on the other side. It's about linking them to deliver outcomes.
What ultimately has the trade war done to your industry? You've come in as Director General in the last few months, just as the Trump administration came in. There's a lot of disruption, whether it's the handset makers, whether they need to diversify, and the supply chain issues. Obviously, chips is a big issue, and the bifurcation of the development of the next generation mobility. How do you see it in a real nutshell?
I think it's very important that we preserve what has made the strength of this industry. If you look at where this industry was 20 years ago, it would be hard not to admit that we got where we are because of our global scale, because more than 1 billion Chinese users, more than 1 billion Indian users were part of the usage base that brought the unit costs down, that gave the scale for people to invest into factories, bigger factories, on a common standard. And that's not even to mention the convenience of having one standard for global roaming. And the ability to use your phone anywhere in the world. And I think that virtue has unlocked so many opportunities for so many people in so many sectors that it would be a pity to miss it. Also, when you look at the innovation sprouting in all regions of the world on this technology, not using all those innovations to deliver the best technologies in the standards would be a massive waste for the world.
Vivek, Badrinath, thanks so much for your time on Bloomberg Television and having us here at the GSMA Mobile World Congress in Shanghai. So much to talk about. We just scratched the surface, obviously, as enterprises and operators try to unlock the potential of 5G, with 5G advanced, and eventually 6G will come someday. But right now, it's unlocking value out of 5G. Back to you, Avril.
Yeah. The sky's the limit, Steve. Thanks so much. Our Chief North Asia correspondent, Stephen Engel, at the Shanghai Mobile World Congress. And as Steve was just mentioning that trade war with his guests, we're hearing some of these comments continuing from the Chinese ambassador to the U.S. as well, speaking in Washington, talking about how the U.S.-China relations are at a critical juncture. The bottom line, the ambassador says, is that U.S. tariffs on China should be removed completely, and that they hope the U.S. will be a partner, not a rival to China, despite some of that more conciliatory tones from the Chinese side. We are, of course, watching for the tariff developments between the U.S. and China. Haidi.
Yeah, Avril, and to that point, at the US-China Gala that we're watching taking place in D.C. at the moment, we've heard, of course, from Ambassador Xie from China. We're now hearing from Ambassador David Perdue from the US side saying that US businesses have become too dependent on China's suppliers. They have to rebalance the trade relationship with China and that the trade should be based on mutual benefit, reciprocity as well. Ambassador Xie had said on sort of a hopeful tone to his remarks that he hopes that the US will be a partner, not a rival to China, that US-China relations sit at a critical juncture. This after some pretty sort of strong words earlier on saying that these tariffs by the US on China should be removed completely, that these tariffs are still, quote, unreasonably high, and that these exclusionary policies will only motivate China to work harder. Well, subscribers can watch us live and see our past interviews on our interactive TV function. That's at TV Go. You can also dive into any of the securities or the Bloomberg functions that we talk about and join in on the conversation as well. You can send us instant messages. Check it out at TV Go. More ahead on the Asia Trade. This is Bloomberg.
Let's get you up to speed with the latest from the corporate front. Microsoft is planning to cut thousands of jobs, particularly in sales. The latest move to trim its workforce amid heavy spending on AI. The terminations follow a round of layoffs earlier in May that hit 6,000 people and fell hardest on product and engineering jobs. The May cuts largely spared customer-facing roles such as sales and marketing. Amazon is ordering some corporate employees to relocate closer to the managers and teams by moving to cities, including Seattle and Washington, D.C., and that's according to documents seen by Bloomberg. Employees have been given 30 days to make a decision and 60 days to relocate. And of course, this comes days after CEO Andy Jassy warned that he expects AI advancements to shrink the company's workforce. Haidi.
Take a look at how we're setting up for the start of the Open across major markets in just a few minutes' time. We're looking like quite a bit of downside there, certainly as we continue to wait for the further developments in the Israel-Iran conflict. We're also seeing oil taking a little bit of a backseat, copper slipping as well. Some of these concerns over the Chinese economy. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. And of course, Haidi, it's about this geopolitical risk adding uncertainty to the macroeconomic backdrop and what we've heard from the Federal Reserve as well.
That's right. The Federal Reserve staying the course, talking about sort of less elevated uncertainties, but of course a lot of that certainty, on the contrary, may be quite negative when it comes to the outlook for the US economy, right? In the meantime, Avril, as you say, we're still waiting to see more certainty as to where the US is headed in terms of its involvement in this Israel-Iran conflict.
Indeed, and whether these oil price gains are filtering through as well into, what we're seeing among consumers and the costs being added on. Certainly, it's interesting in terms of market performance that we're seeing some resilience in Asia stocks for much of this week, right? 3 sessions of gains in Japan as well, despite yesterday starting the day on the back foot. It's interesting because it might also speak to this rotation away from U.S. assets and into what we're seeing in Asia. We're seeing Japanese equities starting a bit soft. The dollar has been climbing for a lot of the days this week, but that also looks fragile. It is a climb that is almost for all the wrong reasons. Still sitting at 145 on dollar yen, and we're not seeing that much of a move when it comes to JGBs. For the board, take a look at South Korean assets as well. Similar picture emerged yesterday where they managed to kind of clock these gains by the end of the session, seeing perhaps an extension of the gains, a bit of optimism surrounding the AI complex as well when it comes to stocks in South Korea. 13.75 is where we're seeing dollar Korea won. Haidi.
Take a look at how we're setting up when it comes to that staggered start to trading here in Australia. We're not seeing much of a movement there when it comes to just the first minute or so. Of course, it is a staggered open, so we'll give that a little bit of time to sort of get started. The Aussie dollar at the moment also holding pretty steady above that 65 US dollar level. The sort of trajectory forward when it comes to the greenback also looks quite fragile at the moment. Treasuries, the rally sort of had a little bit of a stoppage, the recovery rebound, if you will, on the sentiment that we've had from Chair Powell and the Fed as well. There is a sense that these markets are sort of treading water at the moment as we wait for further developments, both in terms of geopolitics and more certainty from central banks. But certainly when it comes to the Fed, Avril, Chair Powell at the moment kind of staying the course for now.
Indeed, these Fed officials continuing to pencil in 2 rate cuts in 2025, saying uncertainty over the economic outlook has peaked but remains elevated.
Uncertainty about the economic outlook has diminished but remains elevated. Many, many surveys say that. They do. So, and that's actually a line from the Teal book, which you can see in 5 years. Remember to check that.
Maybe the war will be over by then.
No, but if you think about it, tariff uncertainty really peaked in April, and since then has come down. And that's really what that's just acknowledging. It's diminished, but still elevated. It's uncertainty. So I think that's an accurate statement.
Our next guest has a somewhat contrarian view that the U.S. will go into recession by the end of this year. Let's discuss with Kristina Hooper, Chief Market Strategist at Man Group. Kristina, great to have you. First off, we're seeing this Fed event sort of passing quite smoothly in terms of the market reaction, but has it bought enough time?
So that's a great question, and we just don't know how long it will take for tariffs to have an impact on the economy. But certainly the Fed suspects that it's going to have an impact this year. If we just look at the median forecast in the dot plot, what we see is continued downward revision to expected GDP growth and continued upward revision to expected inflation, including, of course, core inflation, which is so important to the Fed. So it seems to be having a negative effect or expected to have a negative effect. And that's not all. We've got DOGE cuts. We've got government spending cuts in the planned in the upcoming budget for the fiscal year 2026. There's a lot going on that could very well send the U.S. economy into recession by the end of the year.
And hence your view of being underweight U.S. stocks. What are the sectors that you think are most vulnerable?
So I think certainly the consumer. The consumer has been incredibly resilient for so many years. They have been the engine that has powered the U.S. economy when businesses haven't. And I would argue that consumers are becoming more pressured, especially lower income consumers. And it's a confluence of different policies, as well as anticipated increase in prices. I also think we are going to see a significant increase in unemployment. The Fed only plans for a slight increase, but certainly the economy seems to be going in the wrong direction, and that's going to put added pressure on the consumer. So anything consumer-related, discretionary consumer stocks, I think are going to have a difficult time.
How positive are you when it comes to Asian assets? Of course, the dynamic when it comes to a potential kind of revival in the US dollar or the continued trajectory of US dollar weakness is also quite interesting as well, right? Are there pockets of opportunity that you like in particular in this part of the world?
Oh, absolutely. Well, first, I should say U.S. stocks are quite vulnerable because valuations are so high. That is not the case for many Asian stock markets, where valuations are far more reasonable. And there is the potential for upside. Let's look at China, where valuations are very low. China has prepared for the potential of tariff wars. They provided and are providing significant stimulus to the economy, and we've seen that play out in improved domestic consumption. I think that will continue and will accelerate and will help be a buffer against any kind of headwinds that are created by tariffs. So I think there's a lot of opportunity in Asia. And I suspect that we are going to see continued strong performance in areas like Chinese equities this year, especially China tech.
Kristina, when it comes to Japan, are you building sort of a case around a potential risk of a sovereign ratings downgrade, given some of the elevated fiscal risk, some of the sort of environment around broader rising rates and bond market volatility?
I'm not ready to say I think it's likely that there's going to be a downgrade, but certainly there are pressures coming on the Japanese economy, and certainly yields on the long end are not where most want them to be. But I will say that there are some positives. For example, we've seen solid wage growth, and that should be very positive factor in terms of supporting domestic consumption. So I think it's a mixed bag when we look at the Japanese economy.
A lot of this, Kristina, is also related to market drivers in terms of where tariff negotiations go. When it comes to some of these Asian economies, who do you think maybe is first in line to get that sort of reduction? We are expecting some sort of decision come July.
That's a great question. And I think it's very, very hard to divine how this plays out. I think the one thing we can be certain of is extreme uncertainty. Anytime markets think the trade wars are over, businesses are far more wary, as are households. And so I don't think we can call when tariff wars will end, and I don't think we can call who will get the best deals and who will get the first deals.
Kristina, you're also, I think, overweight on Europe. Can you talk to us a bit more about the strategy there? Is it just a pharma defense play, though?
So I would argue it's positive economic surprise. What we're seeing in the U.S. is a withdrawal of stimulus, and so we're getting some negative economic surprise. The opposite is happening in Europe, where there's a ratcheting up of defense spending and plans for an increase in infrastructure spending, what they think of as defense adjacent. I think that's going to be quite stimulative. That doesn't mean that the economy is firing on all cylinders, but it does mean that I think we'll see positive economic surprise this year. And of course, we have attractive valuations and high dividend yields relative to other parts of the world.
What specific sort of opportunities would you be looking at when it comes to China? Is the tech sector of appeal at all?
Absolutely. I would say that is the single most attractive area within the Chinese stock market. What we've seen is that there's a significant amount of innovation. China is a lot more competitive in a number of different tech industries than I think many expected. And so couple that with relatively low valuations, I think there's a very significant upside potential there.
Kristina, always great to have you with us. Kristina Hooper, Chief Market Strategist at Man Group. Take a look at Nippon Steel. This is one of the stocks that we're watching at the moment as we kind of see that end of an era, right? Nippon Steel closing the acquisition of US Steel to end what has been a 1.5 year long saga there. We are seeing a little bit downside, 2.5% higher when it comes to Nippon Steel. There's $14.1 billion acquisition of United States Steel Corp, ending that takeover battle that has, of course, been dominating, I should say, the narrative when it comes to US politics for months as well. This deal now creating the world's second largest steel maker. Really, this combined entity will be a formidable competitor within the American industry as well. So we continue to watch out for further developments there. There's still some sort of elements of uncertainties, but in the end, the concessions are sort of enough to get a last-ditch deal with the blessing of the US government there as well. We are also watching a couple of other stocks. Cacao Corp is one that is in focus when it comes to the Korea session today, up by almost 6% there. Tencent reportedly interested in buying a stake in Cacao Mobility. We'll be watching Tencent as we get into the start of trading in Greater China as well, but that some 40% stake is the interest that we're hearing from in the mobility unit from financial investors, including the likes of TPG and Carlyle looking to sell that stake in Cacao Mobility. More ahead on the Asia Trade. This is Bloomberg.
The level of trust between our countries is rather high. We have very good relations with Iran. We could continue this work and ensure their interests in this area. I will not go into details now, as there are many. All these details have been discussed with both the Israeli and American sides, and we have sent certain signals to our Iranian friends. Overall, it is possible to ensure Iran's interests in the field of peaceful nuclear energy. At the same time, it is possible to address Israel's concerns regarding its security. In my opinion, such options exist.
Iran's got a lot of trouble, and they want to negotiate. And I said, why didn't you negotiate with me before? All this death and destruction. Why didn't you negotiate? I said to the people, why didn't you negotiate with me 2 weeks ago? You could have done fine. You would have had a country. You don't seriously think I'm going to answer that question? Will you strike the Iranian nuclear component? And what time exactly, sir? Sir, would you strike it? Would you please inform us so we can be there and watch? I mean, you don't know that I'm going to even do it. You don't know. I may do it. I may not do it. I mean, nobody knows what I'm going to do.
Russia's Vladimir Putin weighing in on those tensions in the Middle East as President Trump chooses not to say whether the US will join Israel's military campaign against Iran or not. For more on these latest developments, let's bring Bloomberg editor Michael Heath, and that's sort of the next development that we're watching up for, right? Whether there will be involvement and what does that look like?
Yeah, I mean, you sort of get the sense that it is likely to happen, but as you say, it is only speculation. I mean, it's almost like the next line from President Trump there was that was unspoken was even I don't know what I'm going to do kind of thing. But there is a question, and it was reported by Axios this morning that Trump had been asking his national security people, if they do go ahead, will these bunker buster bombs actually do the job? Will they destroy the Fordo facility that's under the mountain? And it's a reasonable question. They've never been used in wartime. They've only been tested. And the worst case scenario for the US would be to get involved in this, not actually achieve its objectives, but then open itself up to retaliation. I mean, there's about 45,000 US troops across the region that would be within range of Iran's missiles. And there's obviously a lot of militias and other groups that are supported by Iran that could be unleashed there as well. There's the Straits of Hormuz, the oil prices going through the roof, which is always a problem for US presidents. So there's a lot to be weighed up there. By the same token, we do seem to be like at a historic moment here. I mean, Israel has managed to take control of the skies, which is hugely important in warfare, particularly when everyone's sort of operating at long range. I mean, I was reading the Israeli pilots. It's about a 3 to 5 hour trip, round trip for them to run a sortie. I mean, we're talking long distances for a lot of this sort of stuff, and the US would obviously have to fly in its bombers as well. So a lot of uncertainty, a lot of speculation. I mean, we never know that perhaps Iran fronts up and says, look, we will do a deal. Putin there seemed to be sort of offering himself as a negotiator. I mean, it's ironic, a man who's conducting his own brutal war, posing as peacemaker. But nonetheless, Russia does have a historic relationship with Iran. It would be aware that Iran is pursuing a nuclear weapon. I think most people are, despite what Putin says there. But there is scope for Iran to stand down there and to give up its potential capabilities or its research there, and to just stick to a civil program. But we really just have to wait to see. It's a lot of speculation entering the void at the moment.
Yeah, Mike, it's interesting to see how these dynamics are sort of shifting among these long-time alliances. But, to your point about the U.S. keeping it ambiguous, to what extent are the Israelis banking on U.S. involvement? I mean, what is the calculus there for them?
Yeah, look, I think that the whole time, I mean, Israel has been making clear that it hasn't asked the US. You sort of, when we spoke last time, that you sort of mentioned the domestic issues in the US. Prime Minister Netanyahu doesn't want to be seen to be asking the US and making more trouble in the Republican Party between hawks who want to attack Iran and isolationists who want the US to stay well clear of any Middle East involvement. So, but they certainly have cleared the path there for the US. I mean, it's been astonishing again, what we've seen in the last couple of years from Israel's military and its intelligence services. Its performance has been extraordinary. And so they've managed to basically clear the skies where there's not much of a threat there if you're flying over and conducting sorties. And it's done a lot of damage, obviously. About 35% was the last estimate of the platforms Iran uses to launch its missiles, and as well as having assassinated scientists and senior military officials and hit a lot of the nuclear facilities as well. So Israel's done a lot of the work there, and it's sort of cleared the way for the US to then be able to make its entry and use the military hardware that Israel doesn't possess, but that most analysts expect is needed in order to finish the job here. But again, this question is will it finish the job? Because the conventional wisdom is that Israel can set Iran back by months or a year. Israel said it can set it back by a couple of years in terms of its development of a nuclear weapon. But the other question, too, is perhaps if the US doesn't get involved, would Israel send in a commando team perhaps to try to do this on the ground rather than from the air? Given that it has set back Iran's military to some extent, that could be a possibility now. Prime Minister Netanyahu has said Israel still has things up its sleeve. So we really just have to see. But Israel's calculus is that the US in the end will come to the party. That's my sense of it all. But it really has to wait and see. It's not banking on it, but I think they'd be very hopeful to do that. And having the world's most powerful military next year is never a bad thing, obviously.
Indeed. Mike, thank you so much for your analysis. Bloomberg's Michael He for us. More ahead on the Asia trade. This is Bloomberg.
Take a look at one stock that we're watching seeing a jump for a second day, in fact, is Gsma Holdings. This after we saw their best day on record after the founder, the chairman, Junan, filed a lawsuit to reclaim shares from his son, who's the current CEO, Yoon Sang-hoon. So this lawsuit is just part of an ongoing family feud over control over Gsma, B&H Co, and raising concerns about corporate governance, the succession issue when it comes to Gsma Holdings as well. We saw those shares rising 30% on the news. Analysts are speculating at a potential M&A battle for the company. We're seeing a further rise of 17% for the South Korean cosmetics company.
Yeah, Haidi, the other stock that we've been watching is that of Nippon Steel, which rose as much as 2.7%, pairing some of those gains now. Nippon Steel has told the Tokyo Exchange that it expects to record a loss of just under $1.6 billion this fiscal year after closing its $14 billion acquisition of U.S. Steel. Clara Ferreira-Marquez leads our coverage of commodities and energy in Asia. So, Clara, this kind of wraps up this long-running saga of the takeover. Over 18 months thereabouts worth. Tell us about what we should be paying attention to when it comes to the financial situation of Nippon Steel, as well as how smoothly post-merger integration will go.
Well, it's a very good question. I think we're all wondering that at this point. So it's been a very long period, so 18 months, as you said, since the end of 2023 when the deal was first announced, and very turbulent period, a lot of sort of snatching victory from the jaws of defeat. But now it's really the end of the beginning, or the beginning of the end, as they go into the integration phase, and of course paying for all of this. So when you have the big Trump party in Pennsylvania, now it's really time for the hangover. This is a $20 billion company, Nippon Steel, that made a huge acquisition and promised even more investments that they will have to pay for. We're expecting to know a little bit more about the financing, what extent that will be debt and to what extent that will be equity. I'm a little surprised to see the shares up. I think there's a lot of optimism in Tokyo around the growth potential that this deal will bring, but there is a big dilutive effect that I think should be kept in mind too.
Clara, what are some of the biggest uncertainties as we kind of close one chapter and enter the next?
There's quite a lot of uncertainty around the US golden share. How does that work in practice? It's not really a golden share if you think about how the word is used or how the expression is used in Europe. For example, it doesn't include equity, but it will give Washington, and perhaps in the Trump case, particularly the White House, a very big say in how US Steel is run and how some of those big decisions are taken. So we don't know how that will work. We also don't know the extent to which all the growth potential will be realized. So this is really a bet on, can the US be the growth market for the sort of high quality, high grade steel that Nippon Steel wants to manufacture more of? It may be. Is it going to be enough to justify this huge outlay? We will need to see.
Clara Ferrer-Marquez, who leads our coverage of commodities and energy in Asia, and really looking at the next step for the Nippon Steel deal. The level of presidential control is sort of one to focus on. Let's take a look at some of the other corporate stories that we're following at the moment. And US safety investigators have called for urgent action to address an engine issue on the Boeing 737 MAX aircraft that can cause smoke in the cockpit or cabin. The issue is linked to a malfunction in the LEAP 1B engines made by GE Aerospace, which can happen when large birds strike. The agency wants regulators to ensure flight crews are alerted to the problem and that software modifications are implemented. India's securities market regulator has relaxed rules for foreign funds investing in local government bonds as it tries to increase participation from funds tracking global indexes. The regulator says new and existing funds that exclusively invest in government securities will not be required to furnish investor group details. They will also have less frequent Know Your Customer reviews. And Microsoft is planning to cut thousands of jobs, particularly in sales, the latest move to trim its workforce amid heavy spending on AI. The terminations follow a round of layoffs earlier in May that hit 6,000 people and fell hardest on product and engineering roles. The May cuts largely spared customer-facing jobs like sales and marketing, Avril.
Yeah, Heidi, increasingly we're seeing the concerns surrounding the U.S. economy now trickling through into these U.S. corporates in terms of job cuts. Certainly, we're seeing that risk off also filtering in from what we heard from the Federal Reserve, and stock futures are pointing lower, whether you're looking at the broad gauge, the NASDAQ or the Dow. Fed officials, of course, have talked about the need to keep an eye on the tariff uncertainty and how that filters through into the economy. On top of that, there's still some lingering question marks as to what this could mean for the unemployment rate, which they also expected a rise in, along with a projection of a lowering in the growth outlook. Taking a look at how oil is shaping, seeing a bit of a decline and just sitting just above the $76 handle. Of course, oil has been struggling to breach 80 despite the geopolitical risks. More ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade. Let's take a look at how Asia markets are faring. It is a down day despite some earlier resilience. Just looking at the Japanese benchmark sitting about 0.7% lower despite setting up the day on the front foot. We're seeing the oil and coal related stocks among the biggest drags on the topics. It is also a bit of a decline we're seeing on the South Korean and Australian gauges. Heidi.
Well, China's consumption subsidies are threatening to overwhelm authorities even in the richest regions as consumers go on a shopping spree that boosted retail sales growth to the strongest in more than a year. Let's bring our China correspondent Min Lo, who joins us in Hong Kong. So the stimulus program has been so popular in some provinces that they're running out of funds.
Yes, that's right. Some provinces are putting a pause in giving out these subsidies or in accepting application for the subsidies, while other provinces are starting to impose daily quotas. And that's because we saw this big bump, double-digit jump in home appliances sales on year in May because of some of these subsidies. And it really shows you, number one, how effective it has been, but it also means there could be payback in the future because it's causing people to buy now things that they would have bought sometime in the future. And the second thing it does, it's putting pressure on government coffers, because already the central government has doubled the amount of subsidies this year from 150 to 300 billion yuan. It's being funded by these ultra-long special sovereign bonds. And on top of that, the other stimulus measures, the government has raised the fiscal deficit this year. The ultra-long, the special sovereign bond issuance quota this year has been raised as well. All of these are going to raise the interest burden for the Chinese government and erode its spending power. So again, how sustainable is this consumption subsidy? It also just goes to highlight how consumer confidence still remains pretty weak if the subsidies were not in place. And so a more sustainable long-term solution needs to be found to boost domestic spending.
What are some of these longer-term solutions that are being explored to stimulate demand then?
Well, one thing that we have seen Chinese state media calling for is to increase the income of people and improve the income distribution system. And the other approach that the government has been attempting so far is to improve business confidence, to get them to invest and spend more and hire more people, which theoretically is supposed to eventually lead to higher spending power for the people. But of course, this is something that would take longer term to transpire. And also currently, the consumption subsidy system is also encountering some problems. Some of those subsidies are not going to the people they're intended for, because the government has found that many Chinese car dealers have been exploiting the system. They're buying large amount of cars, registering them to qualify for the rebates, and then reselling them in the second-hand used car market. So we're seeing a lot of these zero-mileage cars appearing in the used car market, and that's why at least 6 provinces have also halted the car subsidies of about 20,000 yuan per trade-in to a new electric vehicle. So that's also something that need to be addressed. And of course, longer term, how do you get companies to, think about investing more? And of course, it is the trade war that is also on the minds of many businesses, and depending on how negotiations go with the U.S. as well.
It's interesting to see that they're sort of gaming the system when it comes to stimulus here. Min, thank you so much for sharing your insights and the latest with us. China correspondent Min Lo for us in Hong Kong. And even as we pay attention to these fiscal stimulus measures, we've also been paying attention to the Monetary Fund. PBOC Governor Pang Gongsheng has laid out in the clearest terms yet his vision for the future of a new global currency order after decades of dollar dominance. Speaking at the Lu Jiazui Forum in Shanghai, Pang said discussions are happening around the world on how to reduce excessive reliance on a single currency. He added that the Chinese yuan's global status has risen in recent years.
Going forward, the international monetary system is likely to continue its evolution towards a system where a few sovereign currencies coexist and compete with checks and balance, be it a single sovereign currency or a small group of sovereign currencies serve as the dominant currency. The sovereign currency issues should assume their responsibility by strengthening domestic fiscal discipline and financial regulation.
Let's bring in Zhou, who's the chief economist at Guotai Junan's International in Hong Kong. Really great to have you with us. And there was some disappointment, I think, amidst onlookers and market participants at Lu Jiazui that we didn't get perhaps more stimulus measures being announced. Was that surprising to you? What is the mindset of policymakers at the moment when it comes to either fiscal or monetary measures?
Thank you for having me, Haidi. I think it's important to say that in the first place, the Lu Jiazui Forum focus on the so-called financial system innovation and financial system reform in China. Basically, I don't think it will related to the economic stimulus policies in China for now. I think in the meantime, we do see that China's economy is doing pretty stable from the recent indicators. So I think what PBOC said in yesterday's Lu Jiazui Forum, it's important to say that we do see 2 signals here. One is that China try to diversify its assets globally. I think on one hand, Mr. Pan also mentioned that basically China wants to reduce the influence of the the U.S. dollar for the time being, or even in the longer term. And in the second place, he mentioned the so-called, decentralized payment system across the region. So I think all these kind of things, bring in one or two important topics here, which is that the global currency system is experiencing a very significant change and a challenge in the next few decades. And in the meantime, we do see that the so-called stable coin and also the CBDC, central bank digital currency, will be important in the future. This also means that China will play an important role in the global, in the new kind of regime of the global currency system.
An important role, an increasingly important role, but the sort of road to becoming a global reserve currency is a very ambitious and arduous one, right? Particularly at a time where there's internal weaknesses with the Chinese economy, as well as a downtrend when it comes to trade-weighted use of the yuan.
Well, I think if you look at the Chinese yuan, it's very clear that Chinese yuan follows the dollar index, for the time being. Basically, I think if you look at kind of global trade for now, basically the G2 plays the dominated role in the global kind of a trade system. But in the meantime, we do see that the dollar is weakening, and the Chinese yuan actually tracks the dollar weakness as well. So I think for the rest of the world, the problem is that how to play or how to kind of position their role in terms of the global or changing global dynamics and also the changing global currency system. I think basically the Chinese yuan looks like relatively stable for now, but basic Chinese yuan is depreciating against the basket currency, a currency basket. So I think you can't ignore the two important kind of global power at this moment, but also we have to acknowledge that both China and the U.S. try to give or influence more in the global kind of financial system. I think if you read yesterday's Lujiazui Forum, we also see that China tried to create two global financial systems in the region, in Great China region. One is Shanghai and the other is Hong Kong, and also they try to differentiate the two global financial system in Asia as well. So I think we have to also highlight here is that China tried to create kind of a two kind of differentiated approach for the two global financial cities here, and also in this case offshore market of course important for Hong Kong, and onshore market is also important for Shanghai, and the capital market openness right now is also important for global investors as well. So basically when we talk to our investors, our clients here, the two key words at this moment, one is H-share market and the other is stable coin. I think these are all kind of things are happening on the ground and on the back of the China-US kind of tensions as well.
Among the things happening on the ground, how I wonder, what is your sense of some of these boxes that need to be ticked in order for us to see more yuan internationalization? I mean, transparency when it comes to yuan futures, for example. What else do we need to see?
I think it's very clear that basically China tried to create kind of a more entries for the global investors when they enter into the onshore and also offshore CNH market. And the other thing is that we can see that the PBOC will create a so-called digital currency financial center in Shanghai. And in the meantime, I think China is exploring the so-called CNH stable coin in Hong Kong. Maybe probably in the future explore these kind of things in offshore in FTZ in onshore markets as well. So I think when we tick the box for the Chinese yuan internationalization, basically in the first place is basically so-called global trade system and the payment system. And right now I think it goes to the next stage, basically, which means that decentralized so-called financing and also cross-border CNH funding and leveraging as well as kind of underwriting products will be important for the Chinese Chinese yuan internationalization as well. I think, in the meantime, the dollar's weakness and the status of dollar's kind of a question mark on the dollar status for now will actually bring or create some kind of new environment, bringing kind of favorable kind of environment for Chinese yuan as well.
I was going to ask you then, I mean, given the dollar depreciation, do you think China is seizing enough on this window of opportunity?
Well, it depends on how much dollar will go, but of course we do see that many people believe that it's long-term trend for the dollar to be a kind of weakening. I think on one hand it's also related to basically how much are the weight of the share of the dollar kind of assets from a global investors' perspective. Of course, for now, global investors put a lot of kind of weights on the denominated assets. But I think in the future, even kind of a 5 or 10% percentage point kind of reduction, reduce from a dollar side will definitely create a lot of kind of opportunities for Chinese yuan as well. We know that, for example, one big, U.S. stock, basically the trade volume is bigger than the Hong Kong market trading volume at this moment. So I think, basically all these kind of things means that if global investors turns somehow a little bit kind of focus into Great China region, this will create a very good kind of opportunity for the yuan and the yuan central internationalization in the future.
Hao, thank you so much for your time and your analysis. Hao Zhou, Chief Economist at Guotai Junan International Holdings. Coming up on the Asia trade, China's largest soy sauce producer is gearing up for its Hong Kong trading debut after whetting investors' appetites with a $1.3 billion offering. A preview next. This is Bloomberg.
China's biggest soy sauce maker will begin trading in Hong Kong on Thursday after its $1.3 billion stock offering drew strong demand from investors. Foshan Haitian jumped on Wednesday in Hong Kong's grey market. For more, Bloomberg's Asia Equity Capital Markets reporter Julia Ferretti joins us from Hong Kong. So, Julia, what are we expecting from the listing, and does it sort of build broader momentum when it comes to Hong Kong's IPO market?
That's exactly right, Heidi. This is the latest of a series of listings, successful listings that we've seen in Hong Kong this year. It's one of the largest so far, raising $1.3 billion. The shares did rise yesterday in the grey market, which certainly bodes well for the debut later today. And so it certainly builds on this momentum that we've been seeing throughout the year, basically, as investor optimism and confidence over China and the Chinese market has really improved. And this is also part of a trend of mainland-listed Chinese companies coming to list in Hong Kong, and that's basically been the bulk of the large deals, of the large listings that we've seen this year. And investors have really been piling into these. Partly they're buying shares at a discount, but sometimes not even that wide of a discount, and they've been performing well as well, which obviously fosters even more momentum going forward. And there's also an element of companies trying to catch the window in rather uncertain times. There's still obviously the uncertainty over tariffs, geopolitics, and so whilst the window is there, companies are really trying to seize on it.
Julia, we're also seeing momentum in some of these other sectors. Chinese AI startups, for example. We're expecting a Minimax IPO potentially this year?
That's right, and if it comes to happen, that would be one of the first of China's AI dragons listing and going public and giving investors a chance to buy into one of the most exciting sectors at the moment in China. These companies, following the emergence of DeepSeek in January, which really stoked interest in China's AI sector, have been rushing to invest in new products and unveil new low-cost products to compete with the likes of OpenAI, along with other larger Chinese companies. So it's really quite an interesting IPO. Certainly it would be a landmark one for the sector, and if it does well, then certainly there's lots of others that will follow, given that they require so much capital to keep on investing in order, given the really fierce competition in the sector. And it's also quite a strategic sector for China as it sort of competes with the US for dominance in AI.
Yeah, it's one of those key sectors of contention and competition as well between the US and China. Thanks so much, Julia, for providing these insights for us. Bloomberg Asia Equity Capital Markets reporter Julia Fioretti for us. Now, some money managers see potential for a rebound in Chinese consumption stocks in the second half as signs emerge that domestic demand is improving. For more, let's bring in Asia Equity senior reporter Abhishek Vishnoi for us. Abhi, it's interesting, right? If we're looking at the consumption playbook, retail sales in May, better than expected, but a lot of this was to do with handouts, subsidies. What is going to be driving this optimism for consumption stocks in the second half of the year?
So, like I said, it is a trade for the second half. It's essentially not a secular trend. Handouts are there, and there is some revival in demand too. What we are seeing in May retail sales, which were better than expected, is double-digit growth in certain categories of this sector, which bodes well for traditional consumer stocks, which includes alcohol as well as tobacco players in case of China and some other markets. But again, it's a trade. It's not a secular trend. It's all coming in the backdrop of deflation, which means prices continue to decline, which is essentially a function of consumers delaying consumption, right? So in that context, it remains a trade. What remains a secular trend is, possibly new categories of consumption emerging, like, we have seen those, Lubabu toys, which are becoming a big, craze across the world. Those kind of categories emerging, they might be discretionary, but, given the momentum that they're seeing, that might continue and that might remain a secular trend for their own reasons. But traditional sector, yes, they are seeing double-digit growth, but the backdrop is such that this remains very much a short-term trade, maybe a catch-up to the other sectors of China's markets, which have done well in the first half.
What are some of the other sectors that we should be kind of looking at, perhaps for more longevity in terms of a rally?
Well, absolutely. I mean, without any doubt, it should be China tech and, China pharmaceutical or biotech stocks. I mean, this is now very well established that China is becoming an innovation hub in these two categories, with DeepSeek on the tech AI side, and with so many drug candidates getting licensed to big pharma. So it's very well established that these two themes are very secular, and these two themes are very cheap in comparison to a lot of other places. I mean, the China tech stocks, to my mind, from my conversation so far, can be a very nice, cheap alternative to Mag 7. Mag 7, which was responsible for the majority of US exceptionalism, which is breaking now. So if you want to, look at something which is like Mag 7, but yet not bet on US, that's China tech. And then on the other hand, on the biotech side, I mean, just keep in mind, a lot of Indian pharmaceutical companies trade at a very high multiple, but innovation, new drug candidates are hard to come by there, and China has delivered that. Keep in mind, Pfizer paid, more than $1 billion for 3S Bio for one of its products, and more such candidates are expected. These new drugs that a lot of Chinese companies produce had come in without the advent of AI in a great manner. And when that happens, there would be an even bigger pipeline. So I think these two themes are very well established. And that's the role China is playing in the portfolio now, that of a tech innovation hub.
Well, Asia Equity Senior Reporter Abhishek Vishnoi there. More ahead on the Asia Trade, this is Bloomberg.
I think the single most important line that he said is rates aren't very high. And when we're thinking about the next couple of months, what we're going to learn is more information about the reconciliation bill. So then they're going to incorporate that fully into the SEP, in which case that's going to look a lot more hawkish.
Let's call a spade a spade. I must say I didn't get a lot of new information out of this meeting. I think Mike Mickey summed it up. There's a lot of uncertainty.
I think the banner hanging over this entire press conference and the forecast is stagflation. They revised down GDP growth to 1.4 and they revised up inflation to 3%. That's telling you that they are beginning to worry about the things that are hitting the U.S. economy.
There's something we're not talking about, which could have been, the headline, which is this is the first statement of economic projections post the tariff uncertainty.
Bloomberg TV guests on the Fed's decision to hold rates and new economic projections amid the tariff uncertainty. And of course, following on from the Fed, we've also seen the Brazilian central bank hiking rates, Haidi, and we're watching out for the Bank of England. That's the big one, expected to hold things unchanged, but then tee up rate cuts for later parts of the year as well.
Yeah, thematically, we're seeing a lot of the same, right? Concerns over the prospect of elevated inflation, higher oil prices, slowing economy. That's for the UK, of course. We're also seeing Taiwan's central bank likely to hold its benchmark rate at 2% for a fifth straight quarter. These ongoing concerns about the impact of tariffs, a broader slowdown in the economy, and inflation there as well. The outlier, though, Avril, is what we're expecting from the central bank in the Philippines. They're expected to cut for the second time this year to tame inflation and to support the economy. We've seen inflation slipping to a 5-year low of 1.3% in May. That gives the bank really a little bit more room to ease further, and policymakers may well even take a more accommodative positioning given that we've seen slower economic growth, a lot of these build-up of global uncertainties as well, particularly as we saw the slow pace of growth in that first quarter. So that is the picture when it comes to Asian markets. Pretty tepid session there. That is just about it for the Asia trade. The China show is next. This is Bloomberg.